Earnings season is underway thick and fast, and one more set of numbers that got reported yesterday was Anand Rathi Wealth. They came out with a rather good set of numbers. Highest ever revenue of 131.6 crores. Well, if you add the other income, then slightly higher than that. The yields expanded from 1.4 to 1.6% quarter on quarter, at least sequentially. I presume because of higher MLD issuances. The queries to the two gentlemen who joined us today, Mr. Anand Rathi and Feroze Azeez, is to try and understand whether the momentum can continue in a period which looks fairly volatile from an investing perspective. Gentlemen, both of you, thanks so much for joining in, and congrats on a good quarter. What were the driving factors behind this highest ever revenue growth? Continuation of the past, or is there something specific that happened in quarter one as well?
Thank you, Neeraj. I think for the compliments, we have produced excellent results. As you have seen, our profits have increased by 34%, revenue has increased by 36% compared to last year. Even compared to the last quarter, we have seen the growth of 15% in our profits and 16% in revenue. I think this has obviously come because of various steps which we have taken of number one, very large net inflow, with the largest inflow which in our history we recorded. In 3 months, we had more than 1,400 crores of new inflow in the 3 months' time. Also added about 400 new clients during this period. Again, a new record which you've done. So obviously, it is because of all-round efforts which have been made, and our team, obviously, I think has done very good business. Feroze may like to add something more to this, Feroze.
Yes, sir. Thank you, Neeraj. I think from a perspective of where we are today and what quarter results have in store for us, of course, they are very encouraging. But what makes us very happy is the lead indicators doing very well, not just the past. Lead indicators in our business largely depend on how much new money clients give you and how many new clients you get. Your trail revenue growth, 42% trail revenue growth, like you alluded to, an MLD larger issuance. But if you look at the trail revenue growth, it is greater than the revenue growth of 36%, which is overall, which is very heartening to see. When there are trying times, clients generally, when they give you more money, it's most like a feedback. It's a testimony that they trust us more during bad times. You relatively do better. So we are very well poised for disrupting the wealth management business from a perspective of highly educated HNI families who take rational rather than emotional decisions. When you look at our net mobilization in equity during average lower Nifty levels is greater than in normal times. So that I think is very heartening, and those 3 lead indicators give us a very large sense of how the business is poised on the foundation created over a decade and a half.
This kind of sets you up for meeting the guidance. I mean, it's too early right now to talk about the year, but I'm guessing a good start is it never hurts. So it kind of keeps you in the hunt for the numbers that you had guided at the start of the year.
Yes, Neeraj, as you've seen that we already, compared to guidance, both in terms of revenue, our revenue guidance was about 495 crores and the paid guidance was 155 crores. On both accounts, we have achieved more than 25%, about 27, 28% of the annual guidance. So our firm belief is that I think we should be able to not only meet, but beat the guidance.
Yeah, viewers, the reason why I actually asked this question about guidance in the first quarter itself is because, as I learned just before the interview, that about 20 to 22% of the business happens in Q1. This time around, they've done more. So therefore, it was important to get that going. A question on yields, because the yields, I presume, have expanded sequentially to 1.6% as well because of higher MLD issuances. Now, is that a phenomenon that you reckon could last? I mean, am I correct, firstly? Is that a phenomenon that could last well into the year? Or at some point of time, you will see a normalization of the yields?
So, Neeraj, to my mind, the yields are a function of the AUM you have. Currently, when you look at the net mobilization, which is the highest ever, your base is smaller. So when markets return that fall, then your base becomes larger. So a sustained yield of 1.4 to 1.5% is what we gun for. When markets do very well, your AUM, which is a picture, not a video, if I take up an analogy, is a picture of 30th June, for example, reflects a specific date's market value of the assets you manage, which may not be a a high point or a low point. So point I'm trying to make is when markets do well, your AUM bases look larger. When you divide a yield by the AUM, your yields could be 1.6, but what we gun for is anywhere between 1.3 to 1.5%. Currently, it looks larger because it's a deflated value, and everyone knows what the quarter was like. In that, we still have a positive AUM impact in spite of markets in that specific quarter. In the quarter in question is 10% lower on Nifty itself.
Got it. So I reckon the fact that the AUM has stayed flat is on account of the market valuations, right? Because otherwise the money that your clients have put in is actually, if I'm not wrong, increased both YOY and QOQ.
Yes, Neeraj, almost 400% larger net inflows vis-a-vis the last quarter, or the same quarter last year.
Wow. Okay, that's a fairly large number. Okay, the push and pull of doing this bread and butter business, which gets you higher margins, versus the digital wealth business, which I presume would not earn such higher margins. And I believe I would love to understand how is the performance of the digital wealth business be, and how do you envisage that to shape up over the course of the next over the year?
You see, digital wealth is as you know, relatively new business. We have created this platform primarily for the mass affluent client, and there where the interaction, personal interaction requirement will go down substantially. So right now, this is in the development phase. I think as you see, this is a very small percentage of our business as of today. Yeah. But yes, looking at future, because mass affluent again is a big market. Our wealth business primarily is looking at 5 to 50 crore segment, okay, which is HNI. But digital wealth is not looking at HNI, it is looking at mass affluent. People up to, let's say, 1 crore or 2 crores of investment. There we have created a platform. It has already achieved the AUM of 1,000 crores, which is reasonable. But going forward, I think this has great potential, and that's why we're investing in that business. The growth in next 1-2 years may not be large, but long term, if you ask me after 5 years, 10 years, yes, it's a great business to be in.
Okay. Just one quick final question on the numbers. So I saw and I heard, I think Feroze say, or you say, Mr. Rathi, that the number of clients onboarded has gone up, but I saw the number of relationship managers, which you had said that you would want to add to that number, hasn't quite happened. Is that a worry, or do you kind of did it on purpose because you felt you guys felt you don't need so many people onboarded in Q1 on the relationship side?
So Neeraj, to my mind, there are two parts to it. One is currently you have 271 relationship managers. They are operating at 60% capacity because it takes time. On an average, we have about 29 clients per relationship manager. In our opinion, the capacity utilization is 50 relationships comfortably a relationship can manage. So you have capacity utilization headroom of a reasonable amount. 21 clients per RM. That's what has happened. During tough times, what happens is clients realize that which is the better wealth manager, and they start giving references. That's one reason why we have had the highest ever client addition in this quarter. The second thing is the whole bit of from a client standpoint, when you're trying to be when you are a listed company, the perception or the governance and transparency perception goes up, and that gives you another catalyst. So these were the two factors we had influencing our client acquisition over the last quarter, and that's sustainable. Now coming to the RM bit, are we poised to add more RMs? I think from a wealth management standpoint, it's one variable which is the most controlled variable, because the RMs we wish to have are already under training. We have about 300 account managers who get promoted over a period of time to become RMs. So that's a decision of not just a lateral hire from the industry, it's also from the promotion. So that can be calibrated to the market situation and the need of the business.
Got it. Great. Gentlemen, before I thank you, it's been a good quarter and you've given us most of the numbers, but 30 seconds answers each from both of you. Feroze, I'll first come to you. Some things that a mutual fund investor should keep in mind. 30 seconds, either a debt investor or an equity investor, but give us one tip.
So Neeraj, I think any equity fund investor or mutual fund investor, especially on the equity side, before he puts even a rupee, should understand the behavior of equity market. Last 21 years, if you looked at the data, markets correct from peak to trough every financial year, close to 20%. If you can embrace this attribute of equities when you deserve to make 3-4 times more than a fixed deposit, which is what is the result outcome of equity. Prepare yourself before you take the plunge. Don't jump into the pool without having learned swimming.
Got it. Mr. Rathi, a 30-second answer. What do you feel about the markets? We are no longer at the lows and we've eclipsed a little bit of the worries. Can we do more?
You see, markets in short term, as you know, it is event-based and situation-based. It keeps on changing. And largely, but long term, if you ask me, markets are well poised for growth because the valuations, I don't consider valuations are overstretched. Slight variation in valuations always come. And there's a lot of function of, we have seen in last 1 year, in spite of so much of sell-off by FIs, markets have absorbed that money, and also markets have gone down, but not to the extent the other markets, compared to US markets, still our market has done far better. And my belief is it's going to do far better than those markets.
Great. Gentlemen, thank you for speaking to us today and all the best for the quarters ahead.
Thank you. Thank you, Neeraj.
And viewers, thanks for tuning in to this earnings conversation with the management of Anand Rathi Wealth.